If you owe money to CRA, they can take a lot of action against you. In this video, I'm going to explain what are some of the steps that CRA takes when you owe money to CRA, what kind of power they have to take money from your bank account, and what are some of the potential solutions that you have to resolve this issue with the CRA. People may owe CRA for various reasons. It might be personal tax, business tax, GST, HST remittance, or even payroll tax. So if a business has sales tax that they collected from their customer and they haven't remitted that amount to CRA on time, the CRA will go after the business. If the business has employees and the business hasn't paid withholding tax amount to CRA, the CRA will aggressively go against that. In the last few years, the CRA also has been administering different types of COVID-19 related payment. For individual, it might be CERB or CERB, or for business, it might be the CEBA loan. So basically, CRA is collecting all those overpayment that the government had made during the COVID-19 period. CRA collection agents have been very aggressive on reconnecting those payments. Apart from this, CRA also administer other payments for other departments that the government has. For example, if somebody owes money to CRA because of employment insurance or CPP underpayment, CRA will go after that. CRA may also go after if somebody has any student loan because they borrowed money from the government and did not pay back on time. So there are many reasons why people may owe to CRA, and CRA can go after very aggressively depending on the nature of the loan. If somebody owes money to CRA collection agents typically give phone calls to the taxpayer. CRA also send written letters to the taxpayer's home address. A lot of people think that these are scam calls and they ignore the phone calls from unknown number. However, you should not be ignoring those phone calls and try to understand what they are trying to say. When a CRA collection agent calls, they typically will let you know that they're calling from the CRA collection department, and they will identify themselves with their name, their employee number, and the phone number to call back. If you are not 100% sure about the phone number that the phone call came from, you can double check with the CRA database to verify that phone number. The best thing to do in this scenario is give CRA a call back to verify that number. Never share any personal information with unknown people, and always avoid giving any personal information such as date of birth or SIN number. Think about it. CRA already has those information. Why would somebody call you and try to get your SIN number? This happened to me in the past. And what I typically do is I talk to the agent and then I tell them that I will verify your conversation with calling the 1-800 number on the CRA's website. So when I call that phone number, they let me know that this is an actual phone call and I am okay to give personal information. So once you verify the phone number, try to work with that agent to come up with some sort of payment plan. The Income Tax Act gives CRA a lot of power to collect money from you. The first thing that the CRA can do is they can take wage garnishment. Basically, this is a method for CRA to go to your employer and take a percentage or a fixed amount from your paycheck. So before your money comes to your bank account, CRA will start collecting from your paycheck. CRA can also freeze and seize your bank account. In my experience with working with the bank, I saw a few customers where CRA went into their bank account and took money away from that bank account. The income tax rule allows CRA to get access to your bank account, and the banks will comply with CRA when this kind of things happens. If a business owes money to CRA, the CRA can also go after the accounts receivable for the business. If somebody has a house and they owe money to CRA, oftentimes CRA can put a lien on that house. If this happens, the house cannot be sold to somebody else before paying off CRA's debt. In my experience, I have seen few clients who owed money to CRA and they could not do any refinance on their property. Also, if somebody owes money to CRA, The financial institutions and lenders typically do not lend any new money until that person pays off the CRA's debt, because CRA has always the upper hand when it comes to debt payment. What I mean by that is, if somebody owes money to both CRA and the bank, the CRA's money will get paid first before any money can be paid to the bank. In extreme scenario, CRA can also go after other family members. It often happens to the spouses, where the taxpayer owns property or other assets jointly with spouses. So even though the spouse does not owe any money to CRA can go after spouse's assets. What are some of the potential solutions? Now, obviously, if you owe any money to CRA, the CRA will charge you interest and sometimes penalty for any outstanding amount. What is the interest rate? Typically, these interest rates are posted on CRA's website, and you can check out the posted rate to figure out what would be the interest rate. Now, the first solution is to work with the collection agent and figure out a payment plan. CRA has allowed different payment options for taxpayers to pay back their debt. You can set up a regular payment from your My CRA account, or you can do pre-authorized debit from your personal bank account. CRA also allow credit card payment from you. So the bottom line is, please do not ignore those phone calls or the written letters from CRA, and work with the collection agent to come up with a payment plan. Sometimes the agent might be very friendly, and they will come up with a payment plan that suits your budget. The second option is to work with a licensed insolvency trustee. So this is a scenario where you cannot make a payment and you have other debts, and there is no way that you will be out of debt payment. So in that scenario, you will be working with a licensed insolvency trustee, and you may not have to pay back the full amount that you owe to CRA and other lenders. So in a consumer proposal or bankruptcy, as soon as you file for proposal, your interest calculation will stop. That means the CRA or your other lenders will not charge you interest for that outstanding debt. You will often pay a much lower amount compared to the outstanding debt you have. I have seen consumer proposal where the client only pays $20,000-$30,000 for something like an $80,000 outstanding loan. You do not have to pay the full amount in a consumer proposal, and will often pay 30 to 40% depending on your personal situation. Your licensed insolvency trustee will determine whether it's beneficial for you to apply for a consumer proposal or a bankruptcy. Consumer proposal and bankruptcy often comes with other challenges. For example, you cannot apply for certain types of job, and your credit score will be permanently impaired if you claim for consumer proposal and bankruptcy. That means you probably will not be qualified for any further loan until you are fully discharged from your consumer proposal or bankruptcy. So if you are in a situation like that, talk to your licensed insolvency trustee to figure out details. If you want to know about what a consumer proposal or bankruptcy is and what are the consequences, check out the video from Hoyes Mikolas about this topic. See you in the next video.